Everyone talks about indicators, strategies, finding one with a high win rate, but almost no one talks about what I believe is very important in trading. The trade happens twice, first in your mind, then on the charts. And if you have never mentally experienced the trade before risking your money, your emotions will always take over. When people hear the word visualization, they immediately think of imagining success, and they picture the profits, the winning trades, and the dream life. That's not what I'm talking about. Real visualization isn't fantasy, it's preparation. The goal isn't to convince yourself you will win. The goal is to prepare yourself to stay calm no matter what happens. Think about professional athletes. Before they step out on the field, they've already played the game hundreds of times in their mind. They imagine every move, every mistake, every recovery. Even pilots rehearse for emergencies. Firefighters train for disasters. Even music artists rehearse before stepping out on stage. So why do traders sit down, click buy and sell, and expect to suddenly become emotionally disciplined? Your brain performs better when situations feel familiar. Visualization creates that. For your next trading session, give yourself 5 minutes with your eyes closed. See your setup appear, watch yourself, wait patiently, watch yourself execute exactly according to your trading plan. Then imagine the price immediately moving against you, hitting your stop loss. Now here's the most important part. Do not imagine anything else. Instead, picture yourself calmly accepting the loss, journaling the trade, standing up, taking a break, then back on the charts, waiting for the next setup that meets your trading plan. Then imagine the opposite. The trade works perfectly. It hits your take profit. You make money. Now visualize yourself reacting exactly the same way. No celebrations, no overconfidence, just calm execution. Because consistency isn't about controlling the outcome. It's about controlling yourself. The market does not reward excitement. It does not reward confidence. It does not reward predictions. It rewards disciplined execution over hundreds and thousands of trades. Visualization isn't there to predict the future. It's there to prepare you for uncertainty. So when uncertainty arrives, it doesn't feel new. It feels rehearsed. Tomorrow, before opening the charts, spend 5 minutes preparing your mind, because every trade happens twice. First in your mind, then on the charts. And the version you rehearse is often the version you become. Here's a trade on GBPUSD that tested me mentally, but because I'd rehearsed this situation multiple times, I didn't try and control the outcome, but I stayed patient. Here's the trade I took on GBPUSD. So when I approached the markets, I could see that we were clearly bearish. And when we reached about 9 o'clock UK time, I could see that we had this bearish impulsive move and we had this consolidation here. I could clearly see that we swept liquidity at this point here. So from this high to there, we swept that liquidity. And then straight after the sweep, we had this impulsive move which broke structure to the downside, giving us this break of structure here. And what I could see is we had these fair value gaps here. That's one. That's two. And we had a third one here. So we can clearly see that all three of our confluences are met. We've got the liquidity sweep, got the break of structure, and we've got fair value gaps within that impulsive move. So now I can locate the order block. And in a bearish scenario, it will be the last up candle before the bearish move. So this is my order block. And now I can draw the fib tool to see if it lines up with the extreme zone. So I'll draw it to there, So there we can see the order block lines up within our extreme zone. So now we can actually place our trade. So I'll be entering at the 75% of that fib level, my stop loss at the high of that range, and my take profit at the low, which gives me a consistent 3R on my trade. If you noticed, I'm actually on FX Replay, which is a back testing tool, which can help you just practice your strategy and learn to see this kind of patterns within the market. So what I'm risking here is 1%. In return, I'll get $3,000, and that's 1%, which is 1,000 of my 100K account. So I'll click save. As you can see, those parameters have been added by the tool. So now let's play price forward and see what happened. Ooh, there we go. So we had this bullish impulsive move. We went in, we tapped into the 75%, and we can see these two candles here have already rejected. Let's continue playing price to see what happens. And now we're going down. So at this precise moment, this is where my patience was tested. Because if you can see, price tapped into the order block on this first move and then started going down. I think we were at least 2R down. Yeah, 2R down. So all I needed was just that 1R and I'd have won the trade. But what happened? Price actually reversed, went back to my entry point. And I know a lot of traders have these set of rules where once the trade gets to a certain level, they move the stop loss to break even. I don't do any of that. It's set and forget. That's all it is. The only thing I would say is with this strategy, you have a choice whether you're aiming for 3R or 2R or even 1R, whatever you want. You could literally just be taking trades and closing them at 1% return here. That's fine. But if you're going in and trying to manage the trade, then I believe when you start doing things like that, you don't really believe in your strategy. The only thing I would recommend with this is set and forget. Pick your profit target. If I'm going for 1R, 2R, or 3R. This is why it's good to visualize this thing so you know what you're doing when you're in the markets. Your emotions don't get to you. But let's see what happens with this trade. So we got triggered in here. And let me just drag this out. Let's just play price forward and see what happens. Be back into the zone again. And now we're rejecting. That's what we want to see. As you can see, price just kept playing within that zone. Usually what I want to see is price go into my zone and straight away reject. But price just kept on going in and out of the zone. Let's play price forward and see. That's it. Take profit was hit. This is why you need to visualize this kind of trade, because the market is not always gonna give you what you want, where you go into a trade and straight away you're in profit and that's it, goes down, hits your take profit. No, there's times where price comes back and retests your entry, and this is where the traders that have moved their stop loss have been taken out. But us traders who just set their perimeters and leave the trade to play, we actually get a better win rate rather than moving the stop loss. This is where the difference is. You need to actually visualize what you want to see and how you react. It's the main important thing, because you can't control the markets. You sitting there visualizing your trade hitting TP or all these other things, it's not going to work. You use visualization to train your emotion. So when things like this happen, you're not moving your stop loss. You're not closing the trade out of your emotions thinking it's not working out. But yeah, if you like this video, in the link below, I've got my order block simplified ebook, which explains all the confluences I use here and how you can catch the same trades as me. And if you like this video, like and subscribe, and make sure you hit the bell notification because I'll be dropping more videos like this.